Romeo Alvarez, Director and Research Analyst at William O'Neill & Companies. He joins me from Los Angeles. Romeo, thanks a lot for joining us. Talk to us about these most recent numbers from Tawain Semi. What did they show?
Yeah, thanks for having me. The numbers are actually very impressive and confirm what we're thinking about 2025, which will be another strong year for AI-related stocks. AI-related revenues at Tawain Semiconductor doubled or are expected to double this year, and they already account for a quarter of total revenues at the company.
So AI-related demand remains very strong, correct?
That's correct. It's been 2 years almost since ChatGPT kind of went mainstream and people started hearing about AI and how that's impacting the whole semiconductor ecosystem. And we expect that growth to continue in 2025.
Let's take a step back and just explain what Tawain Semi's position is in the artificial intelligence chip market. Many big suppliers, big makers of those chips have to be customers of Tawain Semi. Is that correct?
Basically, anyone who wants to design or make a semiconductor that's related to AI has to go through Tawain Semiconductor. Is the only game in town when it comes to the manufacturing of the semiconductors. When you hear about companies like Nvidia or AMD or Broadcom, they're designing the chips, but they don't own the factories themselves. So they go to Tawain Semiconductor for manufacturing. And there's other companies that can manufacture chips like Intel or Samsung, but they are lagging when it comes to the most advanced manufacturing technology or even the scale that these companies require to keep up with demand. So that's the reason why everyone's going to Tawain Semi, and I'm not expecting that to change in the near term or anytime soon due to the aggressive plans. They just announced CapEx going up 33% this year. They're spending $40 billion in new equipment and new investments to just kind of remain ahead of the pack and to remain as the leaders when it comes to the manufacturing of the chips.
What do you think of the stock's valuation? It's trading now on my screen at 24 times expected earnings. That's about a market multiple, right?
It is above the market multiple, but I think it does deserve that premium because of that leadership in the market that I just mentioned and the prospects for AI. The company just said revenues are expected to grow at more than 20% this year, probably closer to 30%. So it may be above average, but at the same time, we don't expect that to change anytime soon. So we remain buyers of the stock from a valuation standpoint and even from a technical standpoint, which we use at William O'Neill. The stock just broke into new highs, which is a positive signal through our lens.
Let's go to one of the other very high-profile stocks in the sector, Nvidia. What are your thoughts on Nvidia right now?
Yeah, that's a tricky one right now. The stock is basically flat this year, despite strong prospects for AI. And I believe the reason for that, there's multiple factors. One that I mentioned before on your show is the fact that it could be a crowded stock. When you look at the number of funds in the US that own Nvidia at this point, there's about 8,000 funds. And if we use Apple as a name to compare it to, Apple is owned by 7,300, give or take, funds. So basically, almost every client that I talk to already owns it, and it's getting harder and harder for the company to kind of impress the street. We just saw CES, they made multiple announcements, and the stock kind of sold off into that event, and it's back to being flat for the year. At the same time, you're hearing about more restrictions on the sale of AI semiconductors to China, and two of the largest customers at Nvidia are based in Asia. One is Tencent, and the other one is the owner of TikTok, ByteDance. So all of that is putting pressure on the stock. Another reason is the fact that the company is going through a transition from one family of AI chips to a new one, from Hopper to Blackwell. So customers may be waiting to get a hold of the new ones that are coming out and putting the older versions kind of on pause.
We mentioned that Taiwan Semi was trading at 24 times expected earnings. This one, Nvidia, is trading at 46 times expected earnings. Might that be a reason for the recently lackluster performance of the stock?
From our lens, we don't put too much weight on the valuation on the P multiple. We believe that as long as the stock continues to grow at very high rates, then the multiple can be justified. We're looking at the stock more from a supply demand or from a technical standpoint, which would kind of tell us ahead of time whether, like the clues, whether the run is kind of over in the stock. Eventually it will be. So right now we're kind of a little more neutral. It's still on our buy list, but we're not like pounding the table at this point on the stock. It's more like we're monitoring it to see if there's any sort of change of character, like to use that as a signal to kind of move to the sidelines, but we're not there yet.
Romeo, thank you a great deal for this.